Hi, welcome back to our channel. Today we'll share with you some predictions from experts regarding the future of cryptocurrency. A big year for cryptocurrencies was 2021. But what will happen in 2022? So if you're new to this channel, please don't forget to hit the like button and subscribe so you won't miss our new Bitcoin contents. Disclaimer: this is not a financial advice. This video presents solely the opinions based on personal speculations. You should not take it as a financial advice, and you should always do your own research before making any investment. The fact that something worked for us and made us millionaires does not guarantee that it will work for you the same way. Alright, so over the past year, we have witnessed multiple new all-time high prices for Bitcoin, followed by steep drops and increased institutional investment from significant corporations. Late last year, Ethereum, the second largest cryptocurrency, also set a brand new record. The Biden administration and U.S. government representatives have shown an increasing interest in new cryptocurrency regulations. While this has been going on, interest in cryptocurrencies has exploded. According to Dave Abner, head of global development at the well-known cryptocurrency exchange Gemini, 2021 was a breakthrough in many ways. The cryptocurrency industry is receiving a ton of attention and focus. The sector is still young and constantly changing. That explains in large part why every new high for Bitcoin can quickly be followed by precipitous falls. Long-term forecasting is challenging. But in the coming months, industry experts are focusing on topics like institutional adoption of crypto payments and regulation to try and gain a better understanding of the market. Experts discuss the future trends in the crypto space that they are paying attention to, despite the impossibility of making exact predictions. These are cryptocurrency regulation, crypto ETF approval, broader institutional cryptocurrency adoption, Bitcoin's future outlook, and the future of cryptocurrency. Let's begin with predictions for regulation of cryptocurrencies. Expect discussions about cryptocurrency regulation to continue. The regulation of stablecoins has attracted the attention of U.S. authorities. Washington, D.C. lawmakers attempting to establish laws and regulations that will make cryptocurrencies safer for investors and less desirable to cyber criminals. According to Jeffrey Wang, head of the Americas at Amber Group, a Canadian cryptocurrency finance company, regulation is probably one of the biggest overhangs in the crypto industry globally. We would welcome clear regulation very much. While chairman of the Security and Exchange Commission, Gary Gensler has frequently discussed both his own agencies and the Commodity Futures Trading Commission's role in policing the industry. Jerome Powell recently stated that he has no intention of outlawing cryptocurrencies like Ethereum in the United States. Gensler recently went so far as to claim that if stricter regulation is not put in place, investors are likely to get hurt. Additionally, it stands to reason that the IRS would want to ensure that investors understand how to report virtual currency on their tax returns. The remarks made by Gensler and Powell are in line with a growing consensus among U.S. lawmakers and the Biden administration that more regulation of cryptocurrencies is required. Regulation has challenges, just like most other aspects of cryptocurrencies. According to Wang, various agencies might or might not be able to oversee everything, and it varies from state to state. Since U.S. businesses and investors are currently operating without clear guidelines, Wang claims that the removal of unclear regulation would remove a significant roadblock for cryptocurrency. What might the new regulation mean for investors then? Provisions for crypto tax reporting are part of the $1.2 trillion bipartisan infrastructure bill that the president signed in November. These provisions make it simpler for the IRS to monitor crypto activity among Americans. Experts advise investors to keep track of any capital gains or losses on their crypto assets, even in the absence of new legislation. Because of this, investors may find it simpler to properly report cryptocurrency transactions under the new regulations. Shihan Chandrasekera, CPA, head of tax strategy at CoinTracker.io, a crypto tax software company, said exchanges will have to issue 1099-B tax forms with cost basis information to investors. This will significantly lessen the burden of filing cryptocurrency taxes. In already volatile markets, regulatory announcements may have an impact on cryptocurrency prices. Due to the market volatility, investing experts advise limiting your cryptocurrency investments to no more than 5% of your overall portfolio and never investing money you can't afford to lose. In the end, a lot of experts think that regulation is advantageous for the sector. Ben Weiss, CEO and co-founder of CoinFlip, a cryptocurrency buying platform and network of cryptocurrency ATMs, asserts that sensible regulation is a win for everyone. People now have more faith in cryptocurrencies, but I believe we need to take our time and do it correctly. Number 2 prediction: crypto ETF approval. With the first Bitcoin ETF making its debut on the New York Stock Exchange in October of last year, there has already been a significant advancement on this front. The innovation represents a brand new, more traditional way to invest in cryptocurrencies. The BITO Bitcoin ETF enables investors to purchase cryptocurrency directly from conventional investment brokerages such as Fidelity or Vanguard, with which they may already have an account. At the Aspen Security Forum over the summer, Gensler said, "We do it in the equity markets. We do it in the bond markets. People might want it here." However, some claim that the BITO ETF is insufficient because despite being connected to Bitcoin, it does not hold the cryptocurrency itself. The fund has contracts for Bitcoin futures. Although experts say Bitcoin futures may not directly track the price of the cryptocurrency, they do follow the broad trends of the actual crypto. Investors must still wait for an ETF that holds Bitcoin directly for the time being. The SEC has considered approving ETFs on numerous occasions over the past few years, but BITO is the first to do so. So what does a crypto ETF mean for investor? It's too early to predict how many investors will purchase BITO, but trading activity on the fund was brisk in its initial weeks. In general, the more Americans could invest in and have an impact on cryptocurrency market, the more readily available cryptocurrency assets are within traditional investment products. You can add cryptocurrency to your portfolio directly from the same brokerage with which you already have a retirement or other traditional investment account, saving you the time and effort of learning how to use cryptocurrency exchange to trade your digital assets. The risk associated with investing in a crypto ETF like BITO is the same as that associated with other crypto investments. It remains a risky and speculative investment. If you don't want to risk losing the money you invest in cryptocurrencies by buying them on an exchange, you shouldn't invest it in crypto funds either. Think long and hard before deciding whether or not to include cryptocurrencies in your portfolio. Number 3. Broader institutional cryptocurrency adoption. In 2021, mainstream businesses from various sectors showed interest in cryptocurrencies and blockchain technology, and in some cases, they even made their own investments. AMC recently declared that by the end of the year, it will be able to accept Bitcoin payments. By enabling users to purchase on their platforms, fintech companies like PayPal and Square are also placing a bet on cryptocurrencies. Tesla continues to go back and forth on its acceptance of Bitcoin payments, though the company holds billions in crypto assets. This buy-in will increase, some experts say. According to Abner, the industry will continue to grow as a result of the massive inflow of attention that has already occurred. Larger international corporations may accelerate this adoption even more in the second half of this year, according to some experts. Whether it's Amazon or the major banks, Weiss says, what we're looking at is institutions getting involved in crypto. A major retailer like Amazon would add a lot of credibility and start a chain reaction of others accepting it. Indeed, by sharing a job listing for a digital currency and blockchain product lead, Amazon recently sparked rumors that it was moving in that direction, and Walmart is also hiring a crypto expert to oversee its blockchain strategy. What more institutional adoption means for investors. While most people don't currently see the benefit of paying with cryptocurrencies, as more merchants begin to accept them, the situation may change. It will probably take a long time before purchasing goods or services with Bitcoin will be a wise financial move, but increased institutional adoption could lead to more applications for regular users and have an impact on cryptocurrency prices. Nothing is guaranteed, but if you purchase cryptocurrency as a long-term store of value, the greater the likelihood that demand and value will rise as it finds more real-world applications. Since it is the most valuable cryptocurrency by market cap and the rest of the market tends to mimic its trends, Bitcoin is a good indicator of the crypto market as a whole. 2021 saw a wild ride for the price of Bitcoin, which reached a new record high in November when it surpassed $68,000, following previous record highs of over $60,000 in April and October, as well as a summer decline to less than $30,000 in July. Comes this most recent record high. Because of this volatility, experts advise keeping your initial cryptocurrency investments to less than 5% of your overall portfolio. Number 4. Bitcoin's future outlook. How far will Bitcoin climb though? Many experts believe that Bitcoin will reach $100,000 in a matter of time. According to Kiana Daniel, author of Cryptocurrency Investing for Dummies, Bitcoin's past may offer some hints as to what to anticipate moving forward. Since 2011, according to Daniel, there have been numerous significant price spikes followed by declines. What does Bitcoin price volatility mean for investors? Because of Bitcoin's high level of volatility, investors should maintain a steady strategy for long term. Do not be concerned about price fluctuations in the short term if you are purchasing an asset for its potential for long-term growth. The best thing you can do with your cryptocurrency investment is to not look at it at all. Also known as set it and forget it. An emotional reaction can cause investors to act rashly and make decisions that result in losses on their investment. As financial experts continue to remind us every time there is a swing, regardless of whether it is an increase or decrease. Last but not the least, number 5, the future of cryptocurrency. We can speculate on what value cryptocurrency may have for investors in the coming months and years, and many people will. But the reality is that it is still a new and speculative investment, and there is not a lot of history on which to base our predictions about it. No one actually knows anything, regardless of what any particular expert may believe or assert. Because of this, it is imperative that you only invest money that you are prepared to lose. And if you want to build wealth over the long term, you should stick to more traditional investments. Keep your investments modest, and under no circumstances should you prioritize cryptocurrency trading over other important financial objectives, such as putting money away for retirement or putting off debt for a high interest rate. So there you have it, some predictions of experts regarding the future of cryptocurrency. I hope you learned something from the video. If you did, don't forget to hit the like button, subscribe to our channel, and turn on the bell notifications for more interesting topics on Bitcoin.